Hey guys, welcome back to the Capital Mindset Show. Today's going to be a different kind of episode, a little bit more energetic because I'm about to give you your tabloid dose. Okay, so this episode of Capital Mindset, I'm probably going to do them once a week. It's going to be a more fun, relaxed form of Capital Mindset. We're going to be talking about what the heck's going on out there. We're going to talk about some news-related segments. If there is some drama, why not cover the drama? You guys want your little drugs anyway, so I'll just give it to you. So if you're going to find it anywhere, how about having a little bit Capital Mindset perspective on these? So the first thing we're going to be talking about is this everything money drama with financial education Jeremy. So to give you guys the full backstory, I'm going to have to take you guys back almost a year ago today and up until August 23rd, 2021. So here we go. We have everything, not everything money, but we have financial education Jeremy. Very popular guy, has about 700,000 subscribers. He has two bunnies as well. You can see the two little bunnies. Where are my hand? Two little bunnies there. So he's trying to give, well, he's doing quotations, but he basically reviews Everything Money's video, and he gets a little bit testy about their price evaluations for $5.11 for Tattooed Chef, because he has a significant fortune in Tattooed Chef for himself. Okay, and then some things I would like to discuss or say, I've had my criticisms of Everything Money. This video will try to cover both sides of the story and try to give anyone a little bit of food for thought on some of these cases. Now, it took a while, but we finally see exactly what happened. After so long, a lot of people complained that Everything Money didn't have the cojones to actually come after financial education Jeremy, and they were very silent. Now we actually see in this video, and you guys probably saw this video, and I will actually play something for you here, but we have, Paul actually saying, hey, all these things about financial education Jeremy that, probably would get some people upset, and that's close to Paul's personality. So here we go. We're going to let Paul rant a little bit.
Way that I have no idea how that's going to happen. That's why I buy good companies. That when that does happen, I buy more of the company. When you follow these idiot hypesters out there, Jeremy, you are a fraudster. You deserve to be in jail, you sack of shit.
I managed to not call this guy all the names he calls other YouTubers, but
you're an absolute sack of crap. I really, really hope. And by the way, mark my words, it is currently July 6th, 2020.
All right, he basically goes off and says, like, oh, you should be in jail, all that stuff. And yeah. And so we have that officially, okay? So saying that from Paul. And then we have the follow-up video to kind of continue the drama. Because remember, guys, you guys created, I'm kidding, you guys didn't create this, but I'm giving you the drama drug, so to speak. So here we go. We have I Have Been Brutalized video by Financial Education Jeremy, where he goes into details about where he's almost kind of like crying and stuff. And by the way, I'm fully aware that I, in this instance, am the bottom feeder, kind of just making a video about them. But it's not all about them. We have other things to talk about, such as macroeconomic stuff and all that boring stuff towards the end. But I'm giving, the entertaining stuff in the front, okay? So he's been saying, I've been brutalized, basically discussing a lot of the people making a lot of videos on him. I did make a video about Voyager Digital. I didn't make a video specifically regarding it. It was more in isolation as Voyager Digital on its own. There are plenty of other videos or content creators that did their own criticisms. I have in the past, don't get me wrong, absolutely. There's even the one with I have clown hair on him, but yes, so that's that. And so you almost feel bad for him, and then you realize a lot of things that have occurred over time, but trying to remove that from the conversation here, I then want to take you over to the issuance of a challenge. And we have issuance of a challenge by Paul here. He's smiling, he's putting his hand up. Remember, we've had our criticisms about Everything Money in the past, and I'll address those in just a second because I want to give the other side of the argument a little bit of leeway to kind of say, okay, well, it's not, you have two different players. One of them, I don't want to, you probably know which one I would agree with more, but I'm kind of just covering the news, so to speak. I'm a journalist, guys. I'm an unbiased journalist in this instance, okay? So from here, where I'm going to take you over to basically the challenge and explain it. Basically, Paul presented a challenge saying about $1 million. $1 million donated to the charity over the course of 10 years and broken down in 50, 100, 200, and the remaining in the final years of the challenge. Okay, so it's going to be done to the charity and various other rules and regulations that he's imposing upon the game, so to speak. And yes, from there, we actually had a response from Financial Education Jeremy, and this was followed today as well. And we have, like a little bit on the nose, but we have the Mr. Ohio State. Well, we know that, Paul went to Michigan. And then we have gas station manager, because there's a lot of people who actually call him gas station manager, believe it or not, because at one point he was at Quick Trip. And so we have a little bit of context for that. We have, company with no growth, company with no growth, company with no growth. He's listing out his stocks, and I'll actually show you his portfolio in just a second. There is a review video on Everything Money's portfolio. It didn't have all the stocks in it because he doesn't actually reveal it, publicly all the time. And then we have obviously Financial Education Jeremy's, where he just says growth beast company, growth beast company. All companies are growth beast companies, except for the one that went to zero. But there's actually a couple, I believe, that might end up going to zero. But, that's neither here or there. So he says one went to zero, and it's not a coincidence that he puts number six together, where number 6 is a China stock. And that is actually the one part where, Jeremy and I would have some agreement there, but for completely different reasons. I think, but anyways. And there are some other parts of this video I want to discuss, and that is this part. Just a quick comment. Jeremy. Please invest in an iPad. You have and flaunt money. Buy an iPad. Don't do this. I don't know about you guys. I have this on HD. Okay, this is on the max quality that I can possibly do it. All right, 1080p. Let's show you 1080p. This is blurry as balls. Like I don't even know what to tell you. It's so freaking blurry, and I can barely read this. So even like I'll say this just so that I don't have to ever see this again. If you somehow see this video, because you're probably not going to see this video, but I will do it for free, where I will walk you through how you could do this very easily to the point where you'll never have a blurry image again. And might as well, while I'm at it, literally correct this logo. So I also, I get irked every time I see the lines aren't matched together. And so, yeah, that's my offer to you. You don't even have to tell anyone that I did it. You just reach out to me in private. I won't tell anyone you reached out. I will do it for you. This is the only way someone would know. And then when people can find out, if they just don't see any more blurry stuff, that I helped you out a little bit. All right, because it's not that difficult. Okay, it's not that difficult, right? You just need like a little iPad. You don't even need an iPad. You just need something. Which is, I have no idea what you did to get it like that. I don't even know what you did. All right, but anyways, jokes aside. That's what's going on, and he's issuing his own challenge with a different set of money. He brought it down to $300,000, and I'll show you guys basically the. It's so blurry. I look, as long as YouTube channels are active, I can't even tell if there's a typo in here because it hurts my eyes. I legitimately. I'm not trying to joke around with that. It actually kind of hurts my eyes to read that. So he puts a challenge somewhere. Where does he put this challenge? Because I want to show you guys how he changed the challenge. 10 years. He goes off of why 10 years is a long time and why he typically wouldn't want it. He shows this for some reason, which I have memes about financial education, constantly pointing out the Tesla gains, and he always goes, but my Tesla gains. So just the only response I have to is that you're basically doing what the meme predicts that you would do. It's a, but my Tesla gains. Now, I did notice you probably did actually take some profits because the position is smaller. If my memory serves me correct, you did take off some profits. So good for you, because that's exactly what I would have done had I been so blessed with those gains. But let's see, where's the change in the challenge? He did issue the change. Where are you at? Okay, I'm just going to give up. But the change is in here somewhere. He changes it to 300,000, and he changes it over the course of those years. He complains about it being for 10 years, and he tries to say it's going to be simpler and for everyone to be able to keep track of the actual spreadsheets, and both of them will post the spreadsheets, and he says whatever. And also for some context, I just want to pull this up. This is actually from this is the thing I was actually hinting to you guys, is that we have this information that comes actually from a subscriber of Everything Money, and actually is, I'm sorry, Paul, I respect your process and your investing skill, but out of your 11 holdings as of the last portfolio update video, 10 of them are down. We have Walgreens Boots Alliance, Carnival Cruise, a furniture company, HPQ, Intel, Meta, another furniture company, Sleep Number, which we did a live stream on it, and it was asked live by a subscriber, which, by the way, you can do that in live streams. And yes, we found actually that there was some debt on it, and something that under the context or guise of that request was that this is a company that supposedly has no debt, and we found debt live. So goes to show you that in a prepared video, even in a prepared video, there are mistakes, and I've called them out for that. I'm honest, okay? So I'm going to call them out when they deserve to be called out, and also praise them when they deserve to be praised. And I have praised them already on what they've done thus far. So SWBI, SCS, also down, and Baba. Baba's the only one that's up of this list. So if this is their full portfolio, and then at the end they say, depending on your size of the NASDAQ short, because apparently he was short the NASDAQ, seems very unlikely that you could be up up year to date. Okay, so all in all, it does appear as though, there's a lot of explaining here to do, and we don't necessarily deserve an explanation. Maybe some of you actually disagree with that and say we do deserve an explanation. I'm kind of a neutral. I'm just pointing this out. I'm trying to be fair in all parts that need to be fair. Okay, so what we're going to see is probably some, back and forth between these large creators, one of them being very large, one of them still being quite large, but not as large as the other. And so I'd be fairly interested, and I think all of you are interested as well, to see what kind of goes on with that over time. So yeah. All right, so that's basically it. And then on some other bit of news, I also want to talk to you guys about what the heck is going on Twitter. So I'm actually going to become more active on Twitter, which I'll show you guys right now. So if you guys want to, you can go follow me on Twitter. My Twitter handle, is capital_mindset. You can follow me. I have 88 followers, and I never really post on here, but I'm going to be more active on here. And so, there's the meme of today, and so meet Kevin, everybody. So meet Kevin apparently had a little bit of a fiasco, as we would say in Florida, where, alcohol ended up in some place and things happen. I won't really get into it any more than that. You guys probably already know about it. So that's a little bit more of the tabloid news drama that you guys came here for. Just joking, of course, or am I? And so I'm going to be a little bit more active on Twitter, retweeting things I liked, saying things I like. It allows me to get some things across. Some of these things were me. Some of the things were not me back when Austin was on here. But this was something that I wanted to actually... Oh, wait, there's someone actually who responded to this. I'm just kidding. There's a little on the nose there. But there is a distinction between the Fed actually raising interest rates and the Fed merely threatening to raise. We saw that happen when they actually attempted to raise rates back in 2018. Now, even the threat alone can cause investors to panic. This was in January 6, 2022. If you go to the Instagram page, you can follow the meme there that I think aged really well. It has to do with The Office. I tried to post it on YouTube. It gets region locked when I do that. But you can watch it for free. You could watch it for free anyways. There's no paywall behind that, but you can watch it for free without any advertisement on Instagram, and you can enjoy the meme there. I personally believe, but I'm biased because I created it, that it aged really well. Some memes I will delegate to others and gift them the memes because I cannot post them, but for the most part I can post most memes that aren't that spicy. And I think that one aged well. So even if you're Snyder-pilled, you can appreciate this because, yes, that's kind of exactly what happened. Because even though you might say, again, if you're Snyder-pilled, you have to appreciate the psychological impacts of the Federal Reserve and how that kind of affects rates in that key capacity. So going forward, we're going to see some interesting things because we actually saw two Fed officials come out today and actually come out with their support for raising interest rates even faster in July. Some other things I want to actually cover with you guys here today is some news about GameStop. All right, so on the lighter news, GameStop is actually up 15.14% here today, then down 5.21% after hours. Okay, so what the heck happened? Well, they announced a split recently, and so investors are like, "Hey, heck yeah, split." So if I have any 8 followers, I don't hate you or nothing against you. I'm just reporting this, and the apes united together once again in 15.14%, down 5.21% after hours after they announced layoffs right here. So layoffs have been announced at 5 p.m. This story here: GameStop layoffs employee CFO Mike sets to leave. So a lot of layoffs going on at GameStop. Doesn't actually spell strength and endurance, so to speak. So also I want to cover with you guys here today kind of a two-pronged story. So the media is actually catching on to the potential of a recession. No, I do not want this. All right, go away. So yeah, June jobs report is not expected to show an economic slowdown or recession looming. So June job is not expected. So they're not catching on to this. However, you'll see some other things that are going to show you in just a second because they are... So here we have Goldman Sachs actually slashing their GDP forecast for the second quarter to just barely above water. What does that mean? Well, it was 1.9% before. Now it's at 0.7%. And so that's combined with the decline of about 1.6% in the first quarter. So all in all, we're most than likely in a recession currently. It's just the government hasn't really announced it. A lot of inventory data shows that. A lot of industrial data shows that. I'm going to show you some other things to actually kind of showcase that a little bit too. Let's take a look at, for example, the bond market. So let's go ahead and look at the Fred database. So what I'm basically showing here is some yield curve inversions. So first I'm going to zoom out and kind of showcase to you guys a little bit about this. Let me actually, that's far enough, I guess. So you can kind of see here in the grayed out lines, those are recessions. And then each time it goes below the little line, That's a yield curve inversion. So you see a little line there, and then recession there, goes below the line there, recession there, goes below the line there, recession there, goes below the line there, recession there. So these are precursors to recessions. And what basically is saying is that the bond market is telling you something. The market itself, the bond market specifically, is indicating to you that, oh, there is something on the horizon. What is a yield curve inversion? Well, basically what it means is a normal yield curve follows that the longer duration asset has a higher yield than the short duration asset. So that's typical, and that makes sense because the longer you take a loan out into the future, the more the credit risk, right? Not supposedly, quite literally, because I don't know if you're going to pay me back in 30 years, but if I lend you money for a month, I'm going to feel a little bit better about you being able to do that because I don't know your situation in 30 years. I'm going to make an assumption about that. So when we have an inversion, it's basically telling us that, okay, over the shorter term, right, yields are higher than a longer term. In this case, the 2-year to the 10-year, because we're taking the 10-year yield, subtracting out the 2-year yield, and if we get a negative number, right, that means that the 2-year is bigger, right? So because if we have 2 minus 3 is equal to -1, that's a yield curve inversion. We should normally have a 3 minus 2 equals 1 because the 10-year should yield higher than the 2-year. For an example of some quick numbers, right? And so what is this telling us? Well, we saw a yield curve inversion in 2019, and so a lot of people pointed that out and said, okay, well, look, we don't know what is it going to be, but that's what the market's telling us. The market is telling us that we are primed for recession. Then we had COVID, right? It's not that the bond market predicted COVID. It's that the bond market predicted something, or it was ready, it was ripe for something to occur, and there we go. Now we have another yield curve inversion. We actually had 2 distinct yield curve inversions, and I'll actually zoom into the data here. Like I said, you see how the beginning's tabloid, and then towards the end we get to serious stuff. So we had one right here, and I'll actually show you case to the date. So we have it in April 2022. I told you, or we talked about in the past, some of the whispers that we had back in February and March. Look at back here, we had it in 2019. I just wanted to highlight this one to you. But the bond market had a little bit of an issue back in February 2021 and also in October of 2021. Now I'm showing you here, we have inverted yet again because we had an inversion briefly in April. And we talked about that a little bit in one of the live streams. And then now we're at, let me actually zoom in more because I want a quicker zoom in. Now we have another inversion right here. So right now we're dipped below in July. Okay, so what does this mean? Well, the probabilities of, and this is a double dip right here, the probabilities of recession are there, and the bond market is telling us that, all right? One other thing I want to show you guys is this data right here. So current new orders diffusion index for the Federal Reserve District 3, Philadelphia. What do we notice about this? Well, it tends to be that a recession, not all the time, but depending on how severe it is, it usually means that we're in some form of recession. So right now it is dipping. Depending on how severe this is, we could be pretty deep, all right? Or we could be in a recession. Now, if you look at inventory data, we had a lot of inventory buildup and a lot of supply chain shocks, and that kind of contributed. There's a whole host of contributions to why this is occurring. A lot of companies right now are, citing or have been citing for the past year and a half as inventory being a major risk to their operations. Okay, so is this data going to get worse? Maybe, and we'll keep an eye on it for now, but I wouldn't be surprised because other forms of data points have actually been pointing out that this is actually a little bit worse. This is the sign to come. And other stocks have been or the market has been pricing certain stocks down lately as kind of like a show that, okay, you should be worried about something going on. There's some sort of slowdown. There's some sort of slowdown in aggregate demand at the end, and we see that with oil price actually coming down. The speculation is that that's because aggregate demand is expected to come down. Remember that if the consumer gets squeezed on all sides with that necessary spending and that discretionary spending then contracts, well, what do you have in a consumer-based economy? Not so good. All right. So all in all, that pretty much covers everything I wanted to talk to you guys about today. Go follow me on Twitter, Instagram, or whatever if you guys want to. Yes, the rumors, not the rumors, and not rumors, the stuff about Mr. Governor of California is correct. But, be respectful about it. I did it to have fun. That's more of a fun thing. It's not to like say haha poo poo or anything like that. No one was hurt from what I could tell. So, but yeah, that's not even a defense to him. I'm just trying to be a reporter, unbiased reporter as much as possible there. And yes, the drama, the sweet juicy tender drama between Everything Money and Financial Education. I am simply the bottom feeder here. And yeah, so let me know down in the comment section below, how do you you guys feel about these episodes. I like to do them if I can do them at least once a week. That'd be great. I'm probably going to try to do them on Fridays so that I can kind of have the rest of the week to do the other kinds of videos and kind of do a wrap-up video on the end of the week and, talk about things that are going on, share my thoughts, and not in a live stream, just kind of prepared like this. So with that being said, thank you guys so much for watching, and I'll see you guys in the next one. Bye.